Starting today, a pair from the same household will be allowed to go out to purchase food or daily necessities under the movement control order, according to an updated regulation by the Ministry of Health. The update was signed off by Minister Datuk Sri Dr. Adam Baba. This was reiterated later in the day by Senior Minister Datuk Sri Ismail Sabri Yaakob. Previously, only one member of the household was allowed out to buy food and essentials. Additionally, a person may be accompanied by another person when seeking healthcare and medical services within the currently allowed 10-kilometre radius. Ismail Sabri said that several more leeways made to the current MCO will be announced soon. Oil and gas behemoth Sapura Energy saw its fourth quarter FY20 net loss from continuing operations widen to 4.23 billion from 2.23 billion previously. This as revenue fell and it made asset impairment provisions. Revenue for the quarter fell 25.5% to 1.11 billion, mainly due to lower revenue from its engineering and construction segment. Like its international peers, Sapura has booked in sizable impairment as the industry braces itself from the full impact of COVID-19 on business. In the current quarter, Sapura made a provision for impairment on goodwill of 3.04 billion and an impairment on property, plant and equipment of 240.9 million. On top of that, the group recognized an additional provision of 438.8 million in anticipation of delays and prolonged durations to current projects. For its full FY20, net loss widened to 4.56 billion, even as revenue improved by 41% to 6.45 billion ringgit. Going forward, Sapura says it has put in place an agile strategy to withstand the industry's cyclical nature as clients turn more conservative, with many planning to cut capital expenditure. Its order book currently stands at 13.5 billion ringgit. AirAsia Group resumes its scheduled domestic flights in Malaysia from today, followed by Thailand tomorrow, Indonesia and the Philippines, subject to approval from the authorities. The carrier had grounded its fleet on March 28th. Executive Chairman Datuk Kamarudin Maranon said in a statement that the airline is working with the relevant authorities while adhering to guidance from the WHO and the International Civil Aviation Organization to ensure complete compliance for every single flight. Passengers will be required to wear a mask and practice social distancing, while its planes will be regularly sent for a thorough disinfection. As COVID-19 continues to take its toll on airlines, Kamarudin says the group is expecting to achieve at least a 30% year-on-year cost reduction. This will come from initiatives such as deferring aircraft deliveries and restructuring its fuel hedges. Other measures include sacrifices in salaries, renegotiating contracts, and deferring non-essential spend. Kamarudin adds that the group will also continue with the diversification of its revenue base to expand businesses such as Santan, Teleport and Big Pay. Malaysia Marine and Heavy Engineering Holdings returned to the black for its first quarter of FY20, driven by its profitable heavy engineering segment. Net profit came in at 6.1 million compared with a loss of 29.4 million the year before. Revenue spiked by 70.6% to 346.4 million as top line at both its core segments improved. However, despite posting a second consecutive quarter of positive numbers, MHB warns of significant risk ahead in the form of potential impairment of assets on the back of oil market uncertainties as well as fallout from the COVID-19 outbreak. On prospects, MHB expects a risk of deferments and scale down of upstream projects to prolong. The outlook for marine repairs and dry docking also remains uncertain on the back of volatile charter rates. The group says it remains cautious despite Petronas's intention to maintain its domestic capital spending. Lotte Chemical Titan Holdings sank into the red for the first quarter of FY20 as margins were squeezed and there was an increase in write-down of inventories. Lotte reported a net loss of 170 million for the quarter, compared with a net profit of 55.8 million previously. Revenue slumped 32.6% to 1.46 billion due to a lower average selling price and lower sales volume because of weakened demand as a result of various levels of coronavirus-driven lockdowns in the region in January. January. On prospects, Lotte says the downside economic risks are now more prevalent due to heightened concerns on the severity of impact of COVID-19 to the global economy. As for now, Lotte says the situation remains fluid and that it will monitor the situation and optimize its operations to adapt.